This is the question. Now see, in this question actually see, we maintain one record. We are to maintain record for the inventory, and we are to maintain record in such a manner. Hello. Yeah, so we are to maintain record for each item of the inventory, and we are to maintain record in such a manner that we can track the incoming of inventory and outgoing of inventory plus the remaining inventory as well. Okay, so whatever inventory will come in the business, that we will record. Whatever inventory is going out, that also we will record, and whatever inventory is now remaining with us, that also we will record. So we will maintain records in such a manner that it will keep track of incoming of material, outgoing of material, and the remaining material in the business. Okay, and for that the record we maintain is known as stores ledger. The record we maintain, that is known as what? Stores ledger. Okay, and in this ledger we will open each one account for each material. Suppose each material or each product. Suppose in the business there are 3 products, X, Y and Z. So for all these material or all this product, I will open a separate account in the stores ledger. For X, I will open separate account in the stores ledger. For Y, for the product Y or for the material Y, I will open separate account in the store ledger. And same thing I will do for product Z also. Okay. So in store ledger we are to open what? In store ledger we will open account for each item of material or each item of the product in which we are dealing. Okay, and that store ledger will give us idea about the incoming of material, outgoing of material and the remaining material. Okay, so today we will solve one question based on that topic. See the question, what the question says: Ashok Patel runs a computer supplier company. Okay, one of the items stocked in the JAP data disk is the JAP data disk. This is the name of the product. What is the name of the product? JAP. And JAP is what? JAP is data disk. Okay, this is the item, this is the product. Okay, now see these are the detail of this product. See, to show how the store ledger record will appear under FIFO method and average costing method, the following data is used. So these are the data in the month of this is the information of this product in the month of January, then in the month of February, in the month of March, in the month of April and in the month of May. Got it? And this information is related to which product? This JAP product. And we are to prepare what? Store ledger record. For this product we are to prepare a store ledger record. Okay, so see how that store ledger record will appear. And we are to prepare a store ledger record under which method? Both under FIFO method as well as average cost method. Yesterday we discussed na FIFO method and average cost method. Hello. So under both method we are to prepare this store ledger record regarding this product. So see how that store ledger record will appear. Okay, so see that store ledger record. Yeah, just a minute. So in the next page we will open that store ledger record. See, this is the format of store ledger record. This is the complete format. Yeah, so see store ledger record, this is the format. So this store ledger record we will open for that product. What is the name of product? What is the name of that product? Let me see again. The name of that product is JAP, ZAP. And yeah, so for JAP, for that JAP product we have to maintain a store ledger record. And see the column in this store ledger record. First column is for date. So in this column we will put the date of receipt, date of issue. Okay, so this is first column is for date, then second column is for receipt, and this column is again bifurcated in 3 sub columns: quantity, rate, and total cost. These all 3 columns regarding receipts. Then next column is for issues, issues, or you can say sale. In the column for receipt we will record purchase, all the purchases of JAP. Okay, in receipts column we will record that, and in issue column we will record all the sale of regarding that JAP. And in this balance column for balance, we will maintain the record of balance of JAP date wise, that on which date how much JAP is still laying in the business. So that we will get to know from which column? From the column for balance. Okay, so this is the format of stored ledger record. Now see how we will maintain this stored ledger record, and which method we are following right now. Let me write the name of that method, that we are maintaining this stored ledger record by applying which method? First in, first out method. Okay, so this method we will follow. Now see the question. See the question. The question says that in the year 2007, this is which year? 2007, and in the month of January, see, in the month of January already there is opening inventory of this JAP. This product already we have opening inventory. How many units? 40 units we have already. And what is the cost of per unit? £3. So this is the opening inventory. So see how this we will show. So first I will show the date. So first I will write the year 2007, and in the month of January already we have opening inventory. So that opening inventory I will show here. Already we have balance now. So 40 units quantity already I have, and what is the per unit cost? £3. 3 pounds na. So what is the value? What is the value? 40 units multiplied by 3. So the value is 120. Pound 120. Okay, yeah. So this is the opening inventory. No receipt, no issue. This is the opening inventory. Got it? Yeah. Now see, after this, see what we did. After this, see, in the month of February we brought 20 units of JAP. We brought 20 units of JAP, and each unit is of how? What is the cost of each unit? 3.6 pound each. So 20 units we brought, isn't it? So this brought, or you can say purchase, and in which month? In the month of in the month of February. So in the month of February I will write this, and in the column for receipt I will write this. How many units I brought? 20 units. And what is the per unit cost? Pound 3.6. So what is the value? So we have to multiply this. 20 units multiplied by 3.6. So the value will come 72. Pound 72. Got it? Yeah. Pound, and this is also pound. So now see, this we have to update here in the balance, and in the month of February there is no issue, only purchase is there. So only purchase is there, there is no issue. Now what is the status of balance in the month of February? So see the status in the month of February. In the month of February now we have how many units? Tell me. In the month of February, what is the status of unit remaining in the store? 40 units already we have. 40 units already we have, and what is the rate? 3. And now again we purchase new unit, not 20. Yeah, and what is the rate? 3.6. This time the rate is 3.6 already. Okay. So this is the status of stock of that product JAP. And what is the value? This is the value of 40 units, and this is the value of 20 new units, the new units we purchased. So the total value is how much? 120 and 72. So the total value is 192. So this 192 I will write here. So it means now I can say that in the month of February I have total how many units? 60 units. Get my point? And what is the value of these 60 units? 192. If anybody asks me that what is the status of stock in the month of February, at the end of the February month, then I will say that I have 60 units in the store and the value is 192. Got it? Yeah. Now see next. Now see the next. After after February, see what happened. In the month of March, we sold. In the month of March, we sold how many units? Tell me. We sold how many units? 36 units we sold. Units we sold. And what is the selling price per unit? £6. So see, 36 we sold. So now see how we will record. So in the month of February, now this I will write in the month of March, sorry. In the month of March, I issued I sold how many units? I sold 36 units. So 36 units I sold. So and which method we are following? FIFO method na? This first in first out method we followed. So this 36 units we sold from this lot. This is the old lot na, isn't it? So this is the old lot, and from this old lot we will assume that from this lot we sold, because we are following which method? FIFO method, first in first out. Whatever we brought first, that we sold, we sold first. With this we will assume. Whatever we will purchase first, that we will sell in first. Getting my point? So right now there is no, you can say there is no receipt, because we sold the units. And how many units we sold? 36 units. And this 36 units is from this lot. From this lot, first in first out. So this is the first in. So now from this lot we will assume that this 36 units we sold from this lot. And what is the rate of this lot? 3, isn't it? So this 3 I will write here, that this lot we sold, and the rate to this lot is 3. So what is the value of inventory issued or inventory sold? 36 we sold and the value is 3. So the cost of inventory sold is how much? 108. Agree? 36 multiplied by 3. So now what is the status of stock after issuing this 36? What is the status of stock? Out of this 40 we sold 36. It means out of this 40 now 4 units remain na? Out of 40 we sold 36. It means from this lot only 4 units left. And what is the rate per unit? £3, isn't it? So £3 I will write here, £3. 4 units left. From this lot only 4 units left, and this 20 units are still with us as it is, and the rate is 3.6. Got it? And now what is the value? If I ask you that what is the total unit remain after issuing at the end of the March, at the end of the month March, what is the status of store? In the store 24 units are there. After issuing 36 units, 24 units are there. And what is the value now? Before issuing, the value of inventory is how much? 192, isn't it? And from 192 now we will subtract the value of unit issued. So 192 minus 108. So the remaining unit, the value of remaining unit will come, £84. Got it? 192 minus this 108. This is the value of inventory sold. Okay. So 192 minus 108. So we will get 84. This 84 is what? Value of inventory still laying with us, still remain in the business. 24 units. Okay. Yeah. Now see, after March what happened? See, after March, in the month of April, see, we brought 20 units. Now this time the rate is 3.75, isn't it? So new units we purchased 20 units. So this we will write after March, the next month will be April. So 20 units we brought, and this time the rate is 3.75. So what is the value? 20 multiplied by 3.75. So it will come 75. And there is no issue in the month of April. So now what is the status of stock? Now this time we have inventory of the 3 different rates. 4 unit already we have, of rate 3, then 20 units we have of rate 3.6. now new 20 units we purchase, now the rate is 3.75 this time. Getting my point? So this time we have a stock of three different rates, 4 units of 3 each, pound 3 each, 20 units of 3.6 pound each, and 20 new 20 units of pound 3.75 each. Okay, and what is the value now? See, 84 plus this new purchase 75 pound 75, so 84 plus 75. Now the value of stock will be pound 159. Understood or not? Yes. Yeah. Now next, see, after April what happened? After April, see, in the month of May we sold 25 units. Okay, now see, so we sold 25 units. After April, the next month will be May, and in May there is no purchase, there is no receipt. And how many units we sold? 25 units, isn't it? So 25 units we sold, so I will write 25. So I can't write directly 25. So 25 we sold. So out of 25, first we sold this 4, isn't it? To sell 25, as per the first in first out method, we will assume that to sell 25 units, first we sold 4 units. This 4, the rate is 3. Okay. Then remaining 21 units, we are to sell 25 units, no doubt. 25 units we are to sell. One thing, understood this? So to sell 25 units, 4 units we sold this one, because this is the old purchase. Now remaining 21, now remaining out of remaining 21 we sold 20 units, this one 20, and the rate is 3.6. now how many units left to sell? 1 unit now, to make a sale 25. So that one unit we sold from this new lot, and the rate is 3.75. Getting my point? So in this manner we sold 25 units, 4 units this lot, then 20 units from this second lot, and now 1 unit left to make the sale 25. So that 1 unit is from this new lot, and the rate is 3.75. now what is the value of issue? See the value of issue. Just a minute. You understood this point? You understood this point, first in first out, because in the month of May we sold 25 units. So 25 units we sold from which lot? 4 units from this lot, 20 units from this lot, so 24 units we sold. Now remaining 1 unit we sold from this lot, 20, new lot. Yeah, then 1 unit, because we have to make sale 25 units, because we sold 25 units. So 24 units we sold from this lot, 4 and 20, 24, and remaining 1 unit we sold from this lot, and the rate is 3.75. okay. Yeah, now see what is the value of issue. We have to multiply these variables, 4 multiplied by 3, 20 multiplied by 3.6, and 1 multiplied by 3.5. now see what the total value will come. 4 multiplied by 3, the value will come 12. I will write here 12. Then 20 multiplied by 3.6, the value will come 72. Then 1 multiplied by 3.75, so the value will come 3.75. now what is the value of total issue? Make the total of all these value. 12 plus 72 plus 3.75, so the value of issue is how much? 87.75. this is the value of issue. Got it? Yeah. Now what is after issuing 25 units, how many units left? See, from this lot, from this new lot we sold 1 unit, so now it means that only 19 units left, and that is from this lot. Agree or not? Because from the last lot we sold only 1 unit, it means 19 units left now from the last unit, from the last bulk, you can say, from the last lot, you can say. And what is the rate? The rate we have to apply 3.75. okay, because from this lot 1 unit we issued, So from this lot only 19 units left, and the rate to this lot is 3.75. Agree? Now what is the value? So before issuing, the value of inventory is 159. So from this we will subtract this value of issue. So see, 159 minus what is the value of inventory issued? 87.75. So the value will come, 71.25. 71.25. Okay. Pardon? Repeat the question again. Hello? Hello? Mm-hmm. 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 No. We do not need to consider the sale price. Sale price we will not consider, because here we are maintaining the record of inventory. Only cost price we will consider. Sale price you ignore the sale price. You just consider the sale quantity. Yeah, sale price No, see, sale price I am not taking. We do not need to take the sale price. See in the question. Just a minute. In the question, see, sale price is given a 6. This 6. This we will not consider. And see here, this also we will not consider. Because we are talking about only the cost of the unit left. So for that, whatever cost of unit we already had, from that we will subtract the cost of unit sold. No, sale price we will consider in the trading account. This is the store record. So here we will consider only cost price. See, this column will show the cost of unit purchased. This column will show the cost of unit sold, and this column will show the cost of unit remaining with us. Getting my point? So that's why I considered only cost. So what I was explaining, that from this lot 1 unit we sold already. So 19 units left. Okay na? After issuing only 19 units left, that is from this lot, and the rate we have to apply, that is which one? 3.75. Now you multiply 19 multiply by 3.75, so you will get how much? 71.25. This is the answer. Now if anybody asks me that what is the status of stock at the end of the month May, then I will say that at the end of the month May I have 19 units in the store. Only 19 units of that product JAP, and the value is how much? 71.25. This is the value. We do not need to compute the value again. See, simultaneously for each month we are getting the value. At the end of the month January, what is the status of stock? 3 units and the value is 120. At the end of the month February, what is the status of stock? 60 units and the value is 192. At the end of the March, how many units we have? 24 units we have, the value is 84. So like this, for every month we are getting the status of stock. So what is the final conclusion? That at the end of the month May we have 19 units in the stock and the value is this. Okay na? Because our chapter is what? Inventory valuation. So here the inventory is 19 and the value is 71.25. Got it? So this is first in first out method. So what is the importance of this method, first in first out? That while selling the units, we will assume that whatever unit we purchased earlier, or you can say first, that unit we will assume that we sold first. Okay? Yeah, whatever we purchase first, that we will sell first, that we will assume. Okay? Yeah. So now see, same question now we will solve, but now this time the method is different. This time the method is what? Average method. Okay? So see the average method. Same. Yes. So see, now I will write the average method. Same question, but now I am going to follow which method? Average method, average cost method. Okay. Now see the question. So the year is which one? 2007. So 2007. And January. In the month of January there is no receipt and there is no issue. And already we have how many units? 40 units already we have, and the rate is 3, isn't it? And the cost is how much? 120. 40 multiplied by 3, 120. Okay. Now in the month of February, see what we did. In the month of February we brought some units. See the question. In the month of February we brought how many units? Tell me. 20 units, and the rate is 3.6, isn't it? So that I will write here, that 20 units I brought and the rate is 3.6. so see what will be the value. So 20 multiplied by 3.6, so it will come 72. So and after only this receipt is there is no issue in the month of February. Okay. Yeah. Now what is the value? Tell me, what is the status of stock now? Already 40 we had, and now we purchased 20 we purchased. Now the status of stock is 60 units we have now. And what is the value? 120 is the old value, and plus this value of new inventory 72. So 120 plus 72, so the value is how much? 192. Got it? So this time we will not consider the rate. Okay na? So because for when we will issue any inventory, at that time we have to compute the average cost. Okay na? So right now you just leave, you merge. See, 40 plus 20, 60 units, and 120 plus this value 72, 192. You just merge unit with the unit and value with the value. Okay. Yeah. Now next, see, after February what happened? In the month of March we sold how many units? 36. And what is the selling price? Selling price is £6. So this we will not consider here. We will not consider this. Only 36 units we sold. Okay. So see, in the month of March there is no receipt, but we sold 36 units. Okay. So what rate we are to consider? That rate we are to decide here. What rate? No. That rate we have to compute, and that average cost method we have to apply. So for that, see what we will do. Before issue, what is in the month of March we are issuing? We are selling 36 units, isn't it? So before selling, what is the status of store? What is the value? 192. And how many units? 60 units. So tell me, what is the rate? 192 average rate. So total value of inventory is 192, and what is the total quantity of units? 60 units. So 192 divided by 60. So the average rate will come 3.2. Get my point? Let me explain you again. See, in the month of March we are selling 36 units. Okay. So what is the cost of that 36 units? And here we are following which method? Average cost method. So to value the inventory sold, to compute the cost, try to concentrate on my words, to compute the cost of goods sold. Here we sold 36 units. So what is the cost? So that cost we will compute by applying which method? Average cost. So first we need to compute average cost, and for that what we will do? Before selling, what is the status of inventory? The value of inventory is 192 and 60 units were there in the store. So what is the average cost? 3.2. So that 3.2 we will apply here to compute the cost. 3.2. 3.2. Now what is the cost of goods sold? 36 units, and the cost per unit is 3.2 now. So it will come 115.2. 115.20. Okay. So this is the cost of goods sold. This is the cost of goods sold now. Now what after selling? What is the status of stock now? 60 units. 60 after selling. Before selling 60 units were there, but now we sold 36 units. Now what is the remaining? How much units? How many units is left now? I think 24 units left now. 60 minus 36, 24 units left, isn't it? And what is the value? Value means to compute the value of 60 minus this 36. 60 minus 36 we sold. Before selling we had 60 units. Now we sold 36. Now how many units left? 24 units left, isn't it? And now what is the value? So what is the value? So from this value we will subtract the cost of goods sold. This is the cost of goods remained before selling. So 192, and what is the cost of goods sold? 115.2. So the cost of remaining, so the remaining cost will come, just a minute. So the value of remaining unit will come, 76.8. This value 192 minus this cost of goods sold. This amount we have to subtract. This minus this, then we will get 76.8, and this 76.8 is what? Value of 24 units now. Okay. Yeah. Now see, after March what happened? After March, see what happened. April we 20 units we brought, and the cost is 3.75. so brought means this item we will record in the column for receipt. April, how many units we brought? 20 units, and the rate is 3.75. so what is the value? 20 multiplied by 3.75, the value will come 75. And there is no sale in the month of April. Okay. And what is the status of stock? 24 old inventory plus this new inventory 20. Now the total is what? 44 units. Understood? 24 old inventory we had, and now this new inventory we purchased 20 units. So 24 plus 20. Now we have 44 units in the godown, in the store. Agree? And what is the value? This 76.8 plus this 75. Both we have to add. 76.8 plus 75. So the value will come 115.8. Understood? Yeah. So this is the value. This value plus this new value of this new inventory, new purchase 75. Okay. And after April, see what happened. In the month of May, what happened? Tell me. Yeah, 25 units we sold. So first we will value the cost of goods sold in the month of May. How many units we sold? There is no receipt, no purchase. We sold 25 units. So first we have to value, we have to compute the rate. Okay. So see how we will compute the rate. So before selling, what is the status of inventory? The value is 151.8 and the units are 44, isn't it? 151 and the units are 44. So what is the average rate? So 151.8 divided by 44. So the average rate will come 3.75. So 3.45. So this 3.45 we will consider here. 3.45. Okay. Yeah. So 25 multiplied by 3.45. So what is the cost of goods sold? The cost of goods sold is 86.25. this multiplied by this average rate. So this is the cost of goods sold. This is the cost of goods sold. Okay. Yeah. Now what is the cost of goods remained in the now in the business? What is the cost of goods remained in the business? 44 units were there earlier, and 25 units we sold. So out of 44 we sold 25 units. So how many units left? 19 units left, isn't it? And what is the value? So from this value 151.8 we have to subtract this cost of goods sold. So 151.8 and minus what is the cost of goods sold? 86.25. So see the value of these 19 units will come 65.55. This is the cost of goods remained. Okay. So at the end of the month, which month? May. What is the status of inventory? 19 units left, and what is the value? 65.55. Is that clear? So understood this method, average costing method. So see, in this average cost method what we have to do, we just, whenever we sell any product, any unit, we just need to compute the average cost. Okay. And by applying that average cost, you compute the cost of goods sold. Then that cost of goods sold you subtract from this cost of inventory in the business before issuing. This was the cost of inventory in the business, and from this we will subtract this cost of goods sold. So we will get the cost of goods remained. Every time when we will issue, every time whenever we sell, so first we need to compute the average cost and compute the cost of goods sold, then subtract that cost of goods sold in order to know the cost of goods remained in the business. Okay.